IMF says Egypt's preliminary deal for a $12 billion loan program can go to the board for approval only if the government secures $5 to $6 billion in bilateral financing for the first year. Kenya's Central Bank's Monetary Policy Committee is set to meet on September 20 to set its benchmark lending rate. Plus, South Africa's National Union of Mine Workers ends a strike of power utility Eskom after signing a 2-year wage deal. Thank you for joining us. This is Business Incorporated coming to you live from Lagos. I'm Chimeze Ubi Iwawu. Well, we'll begin in the Eurozone, Germany precisely, where the economic growth slowed in the second quarter, albeit less than had been expected. Europe's largest economy expanded by 0.4% between April and June, down from 0.7% in the first quarter, but above forecasts of 0.2% growth. Exports and consumer spending were stronger than forecast, but investment in construction and machinery slowed. The second estimate for GDP expansion across the Eurozone between April and June was confirmed at 0.3%. The data reiterated initial estimates of 0.4% growth in the 28-nation European Union. Now, the first of 4 separate Eurostar strikes by staff from 2 unions gets underway on Friday, but the impact on services is set to be limited. Members of RMT will go on strike from 12th to 15th of August and 27th to 29th of August during the bank holiday weekend. TSSA staff plan to strike on the 14th and 15th of August and 28th and 29th of August. Eurostar has made some modifications to its weekend timetable to ensure all passengers will be able to travel with 8 services cancelled. Now let's cross over to the markets, and right there on the floor of the Frankfurt Stock Exchange, my colleague Ulrich Bartz, and of course he's waiting to feed us in with the updates on the developments there. Good afternoon, Ulrich. Now, data just coming in shows that German economy slowed in second quarter of the year. It expanded by 0.4%, down from 0.7% in the third quarter. What exactly contributed to that slow growth of Europe's largest economy, and how is the market reacting to that data?
Yeah, the market is reacting in a very benign way to that data. When I look at the DAX, yeah, it's going down by 1/3%. If you just look at the graph, the picture the DAX is painting on the big board, it looks actually worse than it is. People attribute this to, well, let's have time for a breather after a very good week here in the European equity markets. The DAX itself here for the German market reached a new annual high yesterday, so a little bit cooling off today, not disappointment in the economic data. One can argue that it's, of course, weaker growth in the second quarter than in the first quarter, but in effect that's an after effect of the very strong, unusually strong growth in the first quarter that sucked away some of the potential for the second quarter, above all in construction. We had a mild winter here in Germany. For anyone averse to winter temperatures, that wasn't all that bad, and the construction industry got a lot done that otherwise would have maybe been in the second quarter, so the data is a little bit slurred there. The economists you hear, and some of which I talked to after the data came out, they still say that it's a very strong first half year for Germany, and that prospects for the further course of the year look very good, although consumer growth they like better than the trend for industry and exports.
Well, perhaps that economic data there is also what is affecting German industrial group Thyssenkrupp. Now, that company has reported an unexpectedly sharp drop in demand from customers, sending its revenue down 12% in the second quarter. What does that say about the state of Germany's steel industry?
It says that there's no progress being made on the desperate situation of the steel industry here in this country and in Europe. There's a glut of steel that's been exacerbated by the import of discount steel, if you will, from China. Now, there are EU anti-dumping regulations now in effect. There's been some easing, therefore, of the price pressure. but there's still, all in all, just too much steel in the market. The European makers are suffering from overcapacity, and so the result is that there really doesn't seem to be any way out but to try to consolidate. What does that mean? Everybody's talking to everyone else about putting production together, maybe even shutting down effects, and thus offers some perspective for profits in the future.
Now let's look at what's happening to the planned merger between two of the oldest companies in the United States, that's Dow and DuPont. I mean, they are currently facing scrutiny in the European Union, where the regulators are probing whether the tie-up would disadvantage farmers. What exactly are the issues? Don't forget, Dow and DuPont announced last December that they intended to merge and create the world's biggest chemical and material groups, valued at about $130 billion, I guess. So what's happening now?
Yeah, the issues at stake are manifold. Basically, the EU Commission will be looking at everything involved with this merger. They say that they're worried about price development, they're worried about quality, they're worried about choice and availability of products for farmers, and they're worried about innovation. That is, they're worried if, let's say, some of the competition gets taken out of the market by two leading producers merging, then there's less incentive to come out with attractive new products that are good for farmers, that may be cheaper, good for the environment, good for the consumer as well. This will be issues that the EU is looking at, so this $130 billion deal is far from anywhere near completion as we speak.
Well, thank you very much, Ulrich. Well, today is the last trading day for the week, and we hope for a better week ahead. In the meantime, enjoy your day and, of course, your weekend. That was Ulrich Batz, DWTV, Channels TV financial correspondent, reporting there from Frankfurt Stock Exchange. I will move on now to the global precious metal market, where gold investment demand surged to a historical record of 1,064 tons in the first half of 2016, accounting for almost half of the total demand for gold. And that's according to the latest data released by the World Gold Council. The figure is 16% higher than the highest record registered in the first half of 2009. The international gold price rose by 25% in the first half of this year, despite several drops, marking a best half-year growth since 1980.
The global environment of negative interest rates and a weaker expectation for rate increase by the Federal Reserve in the United States were among the major factors to drive the gold demand up. The Brexit has dealt a heavy blow to the market, resulting in more anxiety about the financial environment, which led to the investors' chase after gold. A safe asset with good mobility boosted the rise in gold investment in the first half of this year, said Roland Wang, the Managing Director, China, and President of the World Gold Council.
Now in the U.S., the Democratic presidential nominee Hillary Clinton says she will appoint a chief trade prosecutor to ensure countries abide by trade pacts if elected. The new position will be supplemented by tripling the number of trade enforcement officers. Mrs. Clinton made the promises during a speech at a factory in Michigan.
It is true that too often past trade deals have been sold to the American people with rosy scenarios that did not pan out. Too many companies lobbied for trade deals so they could sell products abroad, but then they instead moved abroad and sold back into the United States. China and other countries have gamed the system for too long. Enforcement, particularly during the Bush administration, has been too lax. Investments at home that would make us more competitive have been completely blocked.